Check, check. All right, friendos, what is happening? Here we are for the Libra hearings, day 1 of 2 days of Libra hearings in Washington, D.C. Looks like it's about to start. We've got a chat room set up where a whole bunch of really cool people are getting into this, and yeah, we are ready to go. So I'm gonna tune out, and you'll see me in the chat. The blue ones are me, white ones everyone else. Thanks for hanging out. Please feel free to comment, and we're doing it. All right.
work, its access to and use of consumer financial information, its access to and use of consumer financial information on individuals and or groups of individuals access to and use in credit, insurance, employment, or housing. I appreciate Facebook's response last week. Shortly after the letter was sent, Facebook formally announced its intention to launch the payment system, Libra, and issued a white paper providing some information about the project. Since then, U.S. and global regulators have taken notice, including the Federal Reserve, UK's Financial Conduct Authority, Financial Stability Board, G7, and others. Last week, during the Federal Reserve's semi-annual monetary policy report to Congress, Chairman Powell raised concerns about the cryptocurrency's potential for inciting money laundering and financial instability problems, and also expressed concern over customers' privacy. Yesterday, Secretary Mnuchin stated the Treasury Department has very serious concerns that Libra could be misused by money launderers and terrorist financiers. The Bank of England Governor Mark Carney said Libra, if it achieves its ambitions, would be systemically important. As such, it would have to meet the highest standards of prudential regulation and consumer protection. It must address issues ranging from anti-money laundering to data protection to operational resilience. Concerns include, but are in no way limited, to how the payment system will work, how it will be managed, and how Libra, the Libra Association, Calibra, and Facebook will all interact. What consumer protections will apply, and potential implications for consumers with respect to financial loss from fraud or the project's failure. How individuals' data will be protected, and how individuals' data will be protected, and how individuals' privacy will be preserved. How the Libra ecosystem interacts with the Bank Secrecy Act and other existing anti-money laws. Concerns include, but are in no way limited, to how the payment system will work, how it will be managed, and how Libra, the Libra Association, Calibra, and Facebook will all interact. What consumer protections will apply, and potential implications for consumers with respect to financial loss from fraud or the project's failure. How individuals' data will be protected, and how individuals' privacy will be preserved. How the Libra ecosystem interacts with the Bank Secrecy Act and other existing anti-money laundering regulations, and ways that Libra could threaten financial stability and the steps that could be taken preemptively to mitigate those risks. Despite the uncertainties, Facebook's stated goals for the payment system are commendable. According to the World Bank, 1.7 billion adults remain unbanked, but 2/3 of them own a mobile phone or otherwise have access to the internet. If done right, Facebook's efforts to leverage existing and evolving technology and make innovative improvements to traditional and non-traditional payment systems could deliver material benefits, such as expanding access to the financial system for the underbanked and providing cheaper and faster payments. Still, Libra is based on a relatively new and continually evolving technology in which it is not entirely clear how existing laws and regulations apply. I'm particularly interested in its implications for the protection and privacy of individuals' data. Facebook has massive reach and influence within society with over 2 billion active monthly users and access to vast amounts of personal information, including that which is received directly from users and information that can be derived from their behavior, both on and off of Facebook. Libra and Calibra will only expand this reach by increasing commerce on Facebook Inc. platforms. This raises several questions. The Banking Committee has held hearings on data privacy, including as it pertains to the European Union's General Data Protection Regulation, data brokers, and the Fair Credit Reporting Act. Given the significant amount of user information already held by the largest social media platforms and the prospect of gaining even more financial information, Congress needs to give individuals real control over their data. Europe has already done this by imposing obligations on companies and establishing rights for individuals with respect to their data. We need to establish similar obligations for data collectors, brokers, and users, and implement an enforcement system to ensure the collection process is not abused and that data is adequately protected. Individuals are the rightful owners of their data. They should be granted a certain set of privacy rights and the ability to protect those rights through informed consent, including full disclosure of the data that is being gathered and how it is being used. Regulations should be clear and understandable for both collectors and consumers and should not punish those who opt out of collection practices. Individuals should also have the ability to review their data, correct inaccuracies, and have ample opportunity to opt out of it being shared or sold for marketing and other purposes. Chairman Powell also said last week that the privacy rules that we apply to banks, we have no authority to apply to Facebook or to Libra. He added that we may even need to create a new regulator to address such issues. As we determine the next steps, what is clear is the importance that financial innovation happen here in America. In this way, the Libra announcement has heightened the need for policymakers and regulators to establish clear rules of the road. During this hearing, I look forward to hearing more about Facebook's project, the steps it plans to take and has taken with regulators to ensure compliance with all laws and regulations, and how it intends to ensure individuals' privacy is maintained and information is protected. Senator Brown.
Thank you, Mr. Chairman. Facebook is dangerous. Now, Facebook might not intend to be dangerous, but surely they don't respect the power of the technologies they are playing with, like a toddler who has gotten his hands on a book of matches. Facebook has burned down the house over and over and called every arson a learning experience. Facebook has two competing missions: make the world more open and connected, and make a lot of money. And as Facebook attempts to serve both these missions, they wreak havoc on the rest of us. Look at its version of disrupting the newspaper industry. Facebook has made it easier to share what you're reading with friends. At the same time, Facebook has redirected most of the media industry's profits away from actual journalists and into its own coffers. They have done it without the benefit of recreating the local news desk, without conducting the hard-nosed journalism that keeps politicians and businesses honest, and without meeting even the most basic journalistic standards. This kind of creative disruption that doesn't actually create anything is just disruption. Or look at the impact Facebook's profit motive has had on the way it connects people. Facebook and other tech companies will tell you the internet just holds up a mirror to society and reflects what we already are. But that's not true. To be profitable, Facebook has juiced its algorithm to hold up a magnifying glass to society rather than a mirror, kind of like the way I learned in Boy Scouts to use a magnifying glass to burn a hole in a piece of wood. Concentrating our focus on the most divisive issues, pushing the most controversial opinions to the top of our news feeds. Usually those are posts that play on people's fear and worst impulses, but they may not be based on any sort of fact. Facebook does all it can to manipulate its billions of users so it can direct our eyes towards their ads and turn an even bigger profit. This is no exaggeration. In fact, Facebook tested whether it could manipulate our emotions. The corporation ran a psychological experiment in more than 500,000 users to see if it could manipulate our moods. Turns out it can. And that emotional manipulation has led to horrifying results. I don't have to tell you what amplifying our divisions has done to discourse in our country, not just between political parties. I bet half the people in this room, at least, had to block an old high school classmate or even a family member on Facebook. Or look around the world, more troubling. A UN report detailed how Facebook was used to spread propaganda in Myanmar that led to genocide. In the first month of violence, more than 600 members of the Rohingya people were killed. More than 700,000 refugees had to flee the country. I don't think for a minute that Facebook created hate, but we know that their competing missions of connecting people and turning a profit created an algorithm and a business model that intensified it. It's hard to remember a world without Facebook. It's hard to remember a time before we had to tell our kids, be careful what you do on the internet because it won't go away. Today, we expect everyone to know that what happens online has consequences offline. It's just common sense. That's why it's so hard for us to understand why Facebook, the company that ushered in this revolution, doesn't seem to comprehend that its actions have real-world consequences. They don't seem to understand why their intention to run their own currency out of a Swiss bank account, the topic of today's hearings, has been met with such fierce opposition. Facebook CEO Mark Zuckerberg has said that Facebook might be more like a government than it is a company. But no one elected Mark Zuckerberg. And what kind of dystopian government wants to turn families and friends against each other rather than bring people together? Well, maybe I shouldn't answer that. Facebook has demonstrated through scandal after scandal that it doesn't deserve our trust. It should be treated like the profit-seeking corporation it is, just like any other company. Mr. Zuckerberg and his executives have proven over and over that they don't understand that governing or accountability. They're not running a government. They're running a for-profit laboratory. No Facebook executives, to my knowledge, have been harmed by Facebook's experiments. But look what has happened everywhere that Facebook has run its social experiments on us. Their motto has been move fast and break things. They certainly have. They moved fast and broke our political discourse. They moved fast and broke journalism. They moved fast and helped incite a genocide. They've moved fast and they're helping to undermine our democracy. Now Facebook asks people to trust them with their hard-earned paychecks. It takes a breathtaking amount of arrogance to look at that track record and think, you know what we really ought to do next? You know what we ought to do next? Let's run our own bank and our own for-profit version of the Federal Reserve, and let's do it for the whole world. I understand that given the financial crisis, and given the massive inequality and unfairness to workers in our country, and given the fact that so many in this body have forgotten what happened 10 years ago, it's tempting to think anyone could do a better job than the Wall Street mega banks. But the last thing we need is to concentrate even more power in huge corporations. Look at Facebook's record. We'd be crazy to give them a chance to experiment with people's bank accounts, to use powerful tools they don't understand, like monetary policy, to jeopardize hardworking Americans' ability to provide for their family. This is a recipe for more corporate power over markets and consumers and fewer protections for my constituents. Thank you, Mr. Chairman.
Thanks, Senator Brown, and we will now proceed with your testimony. Mr. Marcus, you may proceed.
Thank you, Chairman. Chairman Crapo, Ranking Member Brown, and members of the committee, thank you for the opportunity to appear before you today. My name is David Marcus, and I'm the head of Libra at Facebook. For most of my life, I've been an entrepreneur building products aiming at improving people's lives. For many years, my focus has been financial services. I became PayPal's president after I'd acquired my last startup, and I moved to Facebook about 5 years ago to run Messenger, and more recently to lead our blockchain efforts. In my written testimony, I described the mechanics of Libra. Today, I want to explain why I'm optimistic about what Libra can offer the world. But before I get there, I want to make clear that we recognize we're only at the beginning of this journey. Federal Reserve Chairman Powell has said publicly that the process for launching Libra needs to be patient and thorough, rather than a sprint to implementation. Secretary Mnuchin reinforced those views at his press conference yesterday. We strongly agree with both of them. We will take the time to get this right. We expect the review of Libra to be among the most extensive ever. We are fully committed to working with regulators here and around the world. And let me be clear and unambiguous. Facebook will not offer the Libra digital currency until we have fully addressed regulators concerned and received appropriate approvals. I'd like to start by sharing the vision for Libra. Libra is intended to address an important problem. Imagine a daughter who wants to send money home to her mom in another country. Of the $200 she sends, $14 on average will be lost because of fees. It can also take several days or even a week for the mother to receive the money, a delay that can prove disastrous in an emergency. Not to mention, lines may be long and collection points may be in high crime areas. But it doesn't have to be that way. Wouldn't it be easier and safer if people could securely and inexpensively receive money transfers through their smartphones just like they do for so many other things today? That's what Libra is about, developing a safe, secure, and low-cost way for people to efficiently move money around the world. To realize Libra's promise, Facebook and 27 other organizations have founded the independent Libra Association. These include companies in the payments, technology, telecommunications, blockchain, and venture capital industries, as well as nonprofits like Women's World Banking, who are here today, along with staff from the Libra Association. The Libra Association will govern the Libra blockchain network and administer the Libra Reserve. It will establish the rules of the road and will prioritize privacy and consumer protection. And it will implement safeguards that require service providers in the Libra network to fight money laundering, terrorism financing, and other financial crime. We expect these safeguards will at least meet, if not exceed, existing standards and improve the integrity of the global financial system. When fully formed, we expect the Libra Association to include 100 diverse members. Facebook will only have one vote and will not be in a position to control the association. Nor will Facebook or the Libra Association position themselves to compete with sovereign currencies or interfere with monetary policy. In fact, the Libra Association will work with the Federal Reserve and other central banks to minimize the risk of any competition with their currencies or interference with their monetary policies. These areas are properly the province of central banks. Finally, I would like to turn to Facebook's role in realizing the potential of Libra. To facilitate Libra's use, Facebook has established a subsidiary known as Calibra that will offer one of many digital wallets on the Libra network. Using the Calibra wallet, consumers will be able to save, spend, and send Libra right from their smartphone. If this is successful, Facebook will benefit from more commerce across the family of apps. Calibra will be affordable and accessible and will also be safe and secure with strong safeguards to protect users' accounts and information. We expect the Calibra wallet will be governed by rules administered or enforced by FinCEN, OFAC, and the FTC. It will also be regulated by state financial regulators. Calibra is committed to protecting the privacy of its customers. The Calibra wallet will not share individual customer data with the Libra Association or with Facebook, except for limited circumstances such as preventing fraud or criminal activity and complying with the law. I'm excited about the potential that Libra and Calibra hold, and I'm proud to have initiated this effort here in the United States. I believe that if America doesn't lead innovation in digital currency and payments area, others will. If our country fails to act, we could soon see a digital currency controlled by others whose values are dramatically different from ours. I believe that Libra can drive positive change for many people and can provide an opportunity for leadership consistent with our shared values. I look forward to answering your question, Mr. Chairman.
Thank you very much, Mr. Marcus. I'm going to start out with the question that you anticipated my question actually at the beginning of your statement with regard to jurisdiction, frankly, and the regulatory rules of the road. It seems to me that digital technology innovations like this may be inevitable and could be beneficial. I also believe that the United States should lead in developing what the rules of the road should be. You've already indicated your awareness of Secretary Mnuchin's remarks yesterday, a statement that Chairman Powell gave in responses to this committee when he was before us just a week or so ago, and other concerns that have been raised by federal regulators. By setting up Libra in Geneva, Switzerland, it makes me wonder whether the rules of the road and supervisory oversight will be focused more on the Swiss Financial Market Supervisory Authority. However, in your testimony, you state, as you've again stated today, that Facebook will not offer Libra digital currency until we have fully addressed the regulatory concerns and received appropriate approvals. My first question is, do you agree with me that the United States should lead in establishing the rules of the road and the legal oversight of Libra and similar digital currency initiatives?
Chairman, thank you for your question. Yes, absolutely. I agree that the U.S. should lead. And I want to reaffirm that we chose Switzerland not to evade any responsibilities or oversight, but rather because it is a well-established international place with headquarters for WHO, WTO, even the BIS, the Bank of International Settlements. And despite the fact that the Libra Association will be headquartered in Switzerland, it will still register with FinCEN, and as a result, will have oversight from U.S. regulators. But completely agree with you, Chairman, that the U.S. should lead.
So I appreciate that, and you've already indicated that you see that in the United States that you'll need to deal with FinCEN, OFAC, SEC, and some state regulators. I've been thinking about this question. The United States approaches regulation of data and data privacy in a sectoral way. We have multiple regulators over different pieces of economic activity and other types of social activity. Europe does this differently, for example, through its GDPR, where it's a broad-based rule across sectors. If you look at just FSOC in the financial world, we've got the Treasury, the Federal Reserve, the SEC, the FDIC, the OCC, the CFPB, the NCUA, the CFTC, the FHFA. And I guess my question to you is, have you analyzed and determined in our sectoral approach to regulation, which of all of these regulators would have a piece of creating the rules of the road if the United States stays on this sectoral approach?
Chairman, this is not for me to say, but all I can say today is that we're committed to working until we satisfy all the concerns and regulatory and meet the regulatory bar before we proceed. In the U.S., there are a number of regulators that we're engaged with, and we're also engaged with the G7 working group that includes finance ministries and central banks that are looking into Libra, and we're working collaboratively with them as well.
Well, thank you. And it seems to me, I understand that you can't tell us which agencies really are going to take a claim to some piece of what's happening with the establishment of Libra. But you have committed that you will comply with the regulatory requirements of all U.S. regulators.
Yes, Chairman.
Let me go quickly to one more question. I've got a lot of them. I'll have to submit some of those to you after the hearing. You recently told the Banking Committee that Facebook Inc. collects data from transactions that occur on platform and use it for advertising and personalization. Briefly, would you please describe the personal data collection from on-platform transactions? And what I'm talking about is, will this type of information be collected for on-platform transactions that use the Calibra wallet? For example, when a user buys a product on Facebook through Calibra, will Facebook Inc. allow other digital wallets to be used within its family or products? And if you could, just explain how that will work.
Chairman, one thing is really important, and I want to state this very clearly. We will have, with the Calibra wallet, to compete with a number of other wallets that will operate on top of the Libra network. And the Libra network will be interoperable, meaning that wallets can send money from one wallet to another wallet, which is not possible with the current system. And as a result, to earn people's trust, we will have to have the highest standards when it comes to privacy. And the way we've built Calibra is that no financial data or account data that is actually collected in Calibra to offer the service will actually be shared with Facebook. And the way that we've built this is to separate social and financial data, because we've heard loud and clear from people they don't want those two types of data streams connected. So this is the way the system is designed. Now, for transactions,